Welcome to Profile Traders. This is Reza and you're listening to my market analysis for June the 6th. It has been few days since I issued my last report, but I did not come up with a new one because nothing really changed from the time that I gave you the last report and today. During the last report, I stated that this market was absolutely not going to come down, and since we were very close to the record level high in the S&P futures, it was only a matter of time that we would attempt to break and set a record high in that instrument. Now today we heard from Janet Yellen, which pretty much came out saying absolutely nothing. She said that the economy is weak. At the same time, the economy is strong. That the job market is very satisfactory, but at the same time, she's very concerned over the last report that came out Friday, showing a abysmal 35,000 jobs created. Basically, she told the market, listen, I am absolutely clueless. I have no idea what the hell is going on or what the heck I'm doing. But one thing is for sure, I'm not going to touch the interest rates in the next meeting. And as soon as market sensed that, there was a fury of buying on the upside, and we did clear this most recent high that we had, 2106, and we set a new record high in the market. Let me tell you one thing that you should know. Even if tomorrow every single individual in the United States would decide that they would exit the market and they would no longer put a dime in this market would still go up. You know why? Because there are two elements supporting this market. Element number one, the companies. The companies have found a very astute way of issuing junk bonds at 0% rate or very marginal rate, and take that money and instead of investing it into businesses, hiring people, growing the economy, they use that money to buy back their own shares, and therefore creating an artificial demand for the paper. And number two, and this is the most outrageous one, the Federal Reserve is no longer doing quantitative easing, but they are doing direct equity buy through ETFs. So as long as the Fed is buying stocks through ETFs, and as long as the companies are issuing junk bonds to buy back their own shares, it does not matter what happens in this world, this stock market is going to go up. So for now, we are in record territory. Everything looks good. However, we have to take notice that upon a break of the 2106, this break was not very much so a successful break, because we ended up going rotational and a lot of hesitation, as we can see, above 2106 took place. Now clearly it doesn't mean that it cannot go further up. Definitely it could go further up during the overnight, but based on the day session, it did break out of 2106, but this was not a directional move exiting that 2106. Therefore, I'm a strong believer. Now if we do reject back below 2106, and most importantly clear 2104, so 2104 to me is the main level of support now. Once we do break that, we should come to 2097, which is the blue line down there, and then 2191.75 on the downside. As far as to the upside, it would be silly to give you any upside objections. Nobody knows, nobody can give you an accurate number of how much further this thing can go, because it's impossible to know. So keep a close eye on 2104. Also, let's be reminded that this move has not come up from 2020. It came from 2020 to 2106. Okay, when we did reach 2106, we had an 84 points rally. Then we retracted in this drop here 23 points, and now we are again up 29 points. So we take 84 points, from which we retract 23 and we add 29. We have about 87 points of a rally already behind us. So if this market wants to retract, there is definitely justification for it, and if it doesn't, then God bless them. That means they have more appetite, more money to spend, more buying power to borrow and buy back their own shares, and we're going to continue up. But first sign of weakness will be upon returning into 2106, which has been the breakup level, and then a break below 2104, in order to go to 2097 and then 2091 and a half. And if it really wants to get ugly, we could come for a test of this low at 2008 at 2082.75. Now let's take a look at crude. Crude is pretty much in the same condition, where weakness doesn't happen every single time there is a pullback. The institutions and the speculation trading picks it up, but we are now again at the test of 50, and we are very close to it. We did rest it below 50, gaining momentum, so that this time if it wants to break, it definitely could have follow through to the upside. Let's take a look at the daily chart and see what is going on in there. We are in a very, very distinct channel here, very distinct. Therefore, the main resistance on the upside now, if it wants to really squeeze the hell out of everybody that is short at around 50, we could definitely now go touch the 52 level. At 52 level, we are going to encounter significant resistance based on the past history of the chart, because from that point on, last time when we were at 52, we dropped to 32. And no need to tell you that this market is also extraordinary ahead of itself. I understand that all of a sudden, magically and miraculously, reports came out that all the glutes has been absorbed and that situation has rebalanced itself, but I have been reading very contrary report to that you still have zigga amount of tankers full of oil at sea, not knowing where to go deliver. You are having a very or I should say you are having a very open war between Iran and Saudi Arabia, and now Iran's production is back to where it was pre-embargo and pre-sanction, thanks to Mr. Hussein. Now that they are going to flood the market with their oil at the tune of 3 to 5 million barrels, the Saudis are not going to sit down, let Iranians sell their oils. So probably the Saudis will go and undercut their price in order to gain market share. And the rig counts also is starting to go up in the United States, as $50 a barrel now is becoming attractive again for people to drill. But the speculators have been extraordinarily aggressive with this market, and it still can be in the book that we would go break $50 just to create a bit of a chaos on the upside and hit 51 to 52. If we continue by tomorrow not be able to break 50, then I believe there will be a push to the downside. 49 is going to be support 1. If we clear 49, then the next level of support, the next level of support will come in at 48.70, and if 48.70 doesn't hold, then 48.30. So these are the 3 levels of support. The main level of resistance is 50, and past 50 we have to see how we do break 50. If we break 50 and it explodes up, then I would assume that we are going to go to 51, and past 51 is going to be 52. So very interesting day, and very interesting display of confusion and nonsense from Yellen, which is not surprising at all. So this was the report for today. Thank you for listening. If you wish to learn market profile, go to my website profiletraders.com. You can get all my courses, 5 total, 1 year to my trading room at a very reduced price of $675, and you have a money back guaranteed on that. To the next time, and have a great evening.